Over the past couple of days, I'm sure you've seen that the United States is at war in the Middle East again. Historically, this would drive interest rates down, but what we're seeing early this week, the first week of March, is that rates are actually not coming down as quickly as we thought. I'm sure you've seen the headlines even last week of February. Lowest rates in the last 3 years, and that's still true. If you're on the sidelines of either wanting to buy or sell a home or waiting for the right time to refinance, we are experiencing the lowest rates in the past 3 years. Historically, war triggers fear. With the conflict going on in the Middle East, we're seeing a flock to security from investors. That safety and security usually take shape in forms of oil, gold, and Treasury notes, United States Treasury notes. We're seeing yields sharply rise and sharply fall today. And this is due to the conflict in the Middle East. When we see conflict globally and geopolitically, it often equates to volatility, specifically in the markets, whether that's capital markets with fixed income products such as Treasury notes, mortgage-backed securities, or on the equity side, on the Dow, NASDAQ, and S&P 500. Right now, we're looking for some sort of rhythm, and there's yet to be some. Why this matters for you is that no rhythm and fear in the market equates to historically lower rates. With all the noise going on, rates good, rates bad, rates high, rates low, depending on what news outlet you go to, you'll be filled with opinions, ideas, and honestly, fear. At Freestone, we make it really real for you. We don't do fear here. What we do is education and data to make the best decision for you. If you win, we win. If we win but you don't win, it's not a good opportunity. So if you're on the sidelines for home buying or waiting for the right time to refinance, this might be an appropriate time to have that conversation of what's best for you. The market moving matters for you. This could be an appropriate time to revisit that home buying goal that you've had, to maybe see if it's time to refinance at lower rates as we're now nearing below 6% interest rates. But specifically, HELOCs are coming back into play for my home buyers. As rates come down, more buyers are going to join the home buying pool. It's very pertinent to get with a mortgage strategist to make sure that you are positioned correctly to know your top end budget and know what you have available to you to negotiate. There are so many headlines trying to funnel you one way or the other. Good, bad, good for you, bad for you, and it can be exhausting. The value proposition of working with a mortgage strategist is that we'll help cut through the nonsense and boil it down to what is best for you. I've turned away 2 refinances in the past week because the timing wasn't right for them. Yes, they would save $16 a month, but they would have to pay so many fees in order to save that $1,600 or $16 a month that the math didn't math. Partnering with someone who has your best interest in mind allows you to be successful years to come. It's easy to find wins in the now, but we look for wins that expand years. And we do that by going through and listening to what are your goals? What is your budget? Although you may be approved to go higher, what numbers do you feel comfortable with? We'll weigh and compare and contrast these options with you. There's enough nonsense going on in the headlines. Partner with Freestone today to make sure you're making the best decision. For those considering refinancing may be a good opportunity, but a HELOC might be equally as opportunistic for you. Now, if we're carrying lots of debt, whether that's car notes, other HELOCs, personal loans, or credit cards, this might be an opportune time to arbitrage that debt by rolling that in to a refinance. If you own your home free and clear or have next to a low balance, a HELOC might be a great opportunity for you too to access your home's equity and improve your liquidity position. We're seeing this come to fruition this week with a client that I'm working with in Gresham. Lots of credit card debt, but a great equity position in their home. They're going to refinance $1,400 of minimum monthly payments across all their debt, roll them into their mortgage payment to clear off all of that debt, They'll lower their monthly outgo by $1,300 a month by doing this refinance. Yes, their mortgage payment goes up a hair, but it's going to be lower than it is to keep all of those debt lines open. Our client in Gresham will be able to experience the opportunity to purchase a rental property by cleaning up his debt. It'll improve his credit score, give him more liquidity, and allow him to borrow more to purchase that rental property. All of this movement and noise in interest rates and war and the market, to be vague, can be confusing and overwhelming. At Freestone Mortgage, we pride ourselves on being able to digest that information, coach you down on that, so that there's no gap of information, that you're educated, you're astute, and you're sharp in the market, making the best moves and decisions that help you. Originally, maybe 2023-ish, the concerns really were inflation and the labor market. Well, now with war being added into this, we have a perfect storm of confusion and conflicting data on what that means for the market and what that means for you, American citizen. So let's partner up, let's get you dialed in, and make sure that you're equipped and educated to be successful in this season's home buying market.